Welcome back. I'm Pratap here. Today is 13th August 2024. An important update before we get into the analysis discussion. My uncle, that is my father's elder brother, is passed away, and there could be delays in providing my analysis videos during this week and next week. So kindly excuse me. Even before we get into this analysis, an important update. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So from our channel's homepage, click on this community tab. You get access to this free training program post. This post is having a YouTube playlist link that will take you to all the training videos. Just click on the link. Here you have supply demand zone price action course playlist. Here you have all the training lessons are available. So far 24 lessons are released, and all these 24 lessons are having 62 training videos. And for the first video, you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from the video description, please join at the Telegram channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update at our channel, and also important updates also we'll provide at the Telegram channel. Now let's get into the analysis discussion. So yesterday, end of the day, we identified 1, 2, 3, 4, 5, 6 high liquidity zones from daily and 75 minutes time frame. And we got good trades today, especially from the daily demand zones and one daily supply zone also. Okay, this is the first one is DABUR. This is a daily high liquidity demand zone, and we have a ERC candle, failed ERC candle. So this is a leg-in and two base candles and again a rally candle. This is what our software identified this zone, and this zone should be fine. This is a high liquidity daily demand zone, so this zone should be fine tuned with 75 minutes time frame. So here I have identified multiple zones. We have a rally, two base candles and a rally with the pro gap. This is a fine tuned 75 minute zone. And then again we have ERC candle, failed ERC candle as a leg-in, four base candles and a rally. Actually third one is maybe you can consider even medium size leg candle, but it is part of the base when there are earlier base candles before the leg out. So that's why this entire thing is a base. This is the second 75 minute zone, and again we have a drop base rally. This is another 75 minutes zone. So three fine tuned 75 minute zones we identified. Again we need to fine tune with 15 minutes time frame, the 75 minute zones. So the first one I have identified, we have a drop, 1, 2, 3, 4, 5, 6 base candles and a rally candle with pro gap. And again drop base rally we identified here, and here also the same. We have a failed ERC as a leg-in, base rally. We have perfect fine-tuned 5 minute zones. But what about 5 minutes? So let us fine-tune with 5 minutes those zones. So here again we have a rally candle, 1, 2, 3, 4, 5, 6 base candles are there, and again a rally candle is there. And again you have, this is a leg-in rally, two base candles and a rally with if you add the hidden body, this is a rally candle. And then again we identified another fine tuned zone here, rally, four base candles and a rally. But this zone is a tested zone. But how many times it is tested? Multiple times it is getting tested. See here, this is getting tested multiple times. Even recent test also, it created a zone and prices moved up. That means a lot of liquidity is there in this area. This could be a high liquidity. Maybe 80% we can assume this could be a high liquidity. That way you can plan a trade and see in the recent time again before coming prices moved. Maybe a strong order flow is there in this area. But today price didn't enter into this area. And what about this zone, second zone? This is a fresh zone. What about this zone? This is also a fresh zone. So definitely you can plan the trades because they are the fresh zones. Definitely we can plan the trade in the first zone itself. This is the one we can plan a trade. If this is violated, next one. If next one is also violated, the third one. This is the way you can plan the trade. And what happened today? Let's look into that today. Today we got a trade. The prices entered into the zone. So we got a trade in 14 hours candle. At 14 hours candle, that means 2 o'clock, 2 p.m. we got the trade. After that the zone is slightly pierced. It is within our stop buffer. The blue color line I have drawn. So it is within our stop buffer. And then again prices started moving up. And moreover this zone is having 1:3.7 RR is there. With this stop buffer, taking an entry at this zone, we got a good RR. And also reached the 15 minutes target. This is the 15 minutes target. We have a drop. We have 4 base candles and again a drop. This is the 15 minute zone. And this is the way DABUR has given. Even though it is pierced, this is the main advantage of stop buffers. This is what you should understand. That's why we had a lesson about stop buffers. I think in lesson 19, if I am not wrong, we discussed about stop buffers. So this is one of the reasons why everyday analysis, everyday reports, NeoStock reports, at the end of the report I am providing you the stop buffers for all the F&O stocks and indices. See, the stop buffer today saved the trade. Some of you would have exited at this the moment when it crossed the distal line. But that is not the case. When it crossed the stop buffer, at the time we need to exit. See how we saved, even though the fine-tuned zone is slightly pierced, still we got a trade. And moreover, at what time it is the trade is completed in 5 minutes, the candle? At 14:20. At 14 hours, we got the trade. And 14:20, that means within 20 minutes, the trade is completed. And how much profit we got? DABUR has given 5,375 rupees profit, and also it has given 4% ROI as per one futures margin cost. 4% ROI during the intraday profit it has given. Excellent. Okay, it is 2% less than our average intraday ROI. Our average intraday ROI is 6%. Some stocks always we get less than 6%. Some stocks we get more than 6%. Some stocks we get near 6%. This is what happening. So in this particular trade 4%, but 4% is a very good trade. That too in just 20 minutes. If earlier, if you would have got another trade, this could have been our second trade or maybe it could be third trade. See, we got other trades also. Let us check the time, at what time the trades executed. Remember, this trade is executed at 2 o'clock, afternoon 2 o'clock. 1.5 hours before market closes, you got the trade, and 20 minutes the trade is completed. It gave you 4% ROI as per one futures margin cost. If you are calculating in options, you may get more returns, but always I am doing based on the Futures, because that is the ideal scenario to handle the risk. Because of the risk management point of view, I am always calculating. If you are looking into options, you get even more profit. But that is quite dangerous. Sometimes risk management is not easy in options. So we should be very careful. Okay, this is about DABUR, and another one is DEEPAKNTR. DEEPAKNTR is also a daily high liquidity demand zone. Looks like zone is violated, right? But we got a very good trade. So what is this? Our software identified rally, here rally, base rally. Rally, base rally. And also we know that this zone will be violated, but still we got a trade because of a new concept you learned in lesson 23, if I am not wrong. I will let you remind that concept once again. An important strategy we identified. So rally base rally is a daily high liquidity zone. This I fine tuned with 75 minutes time frame. In the 75 minutes time frame, again you identified we have a drop base rally. So excellent 75 minute zone. And also prices came near to the zone and huge rejection. Maybe we think, we may assume there could be a good order flow. But maybe reasons could be different. But we will understand once we go to why we have to do always top-down analysis. What kind of clarity we get. These are all the reasons why always we are starting from daily until 5 minutes. Next 15 minutes time frame. Also we have a good zone. We have a rally. We have 1, 2, 3, 4, 5 candles and a rally candle. Of course, this is a medium size leg candle, but still it is part of the base because of the earlier base candles and the leg out, and the leg before the leg out candle. So still it is a good zone. 15 minutes rally, base rally. Look into the 5 minutes time frame. In the 5 minutes time frame, see all these base candles. Here we have a leg rally candle, base candle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So what happens to this fine-tuned zone? It will be violated. This entire zone will be violated. That is what we already learned, when a zone will be violated. See, that's why today what happened? The zone is violated easily. This zone is violated. But how we got a good trade in this zone? Because of the concept you learned recently in lesson number 23. Please correct me if it is not lesson number 23. The lower time frame zone as an horizon to the higher time frame high liquidity zone. Can be any zone, but currently we are dealing with high liquidity zones. A lower time frame zone is the responsible for the creation of the higher time frame zone. The lower time frame zone is having a strong order flow. That is what we discussed in that lesson. See here, we have an horizon of a 5 minute zone. Rally, base, rally. Rally, base, rally. This is the horizon, 5 minute zone. And this entire 5 minute zone is the responsible for the creation of this order flow. From here it picked up the order from this zone. See the move after that. Picked up the order and how it moved up. This is the horizon for this entire move. Because we identified this horizon, definitely we can expect another good trade in this area. At least during the intraday we can expect a good trade. That is what happened today. Before this entire zone, high liquidity zone is violated, first we got the trade from this fine-tuned 5 minutes area. Actually it is not a fine-tuned, the 5 minute zone which is responsible for this entire daily high liquidity zone. Please remember, 5 minute zone is responsible for this daily zone, for the daily zone's order flow. So here we have the institutional strong order flow will be there. Today what happened? Check here. Morning 9:55 candle. We got an entry. What about the target? a real challenging. Generally we look for 15 minutes target, right? So that's why. Look into the 15 minutes target. Here you have the 15 minutes target. And reaching this 15 minutes target is not practical this much. The reason is this is around 14% or 15, close to 15% ROI. This one, not ROI, yeah, intraday ROI. I'm sorry, it is ROI. Achieving, if really prices reaches during the intraday close to 15% return we get, but that is not practical. What is our average intraday ROI? 6%. It may go up to sometimes, if it is very good, it may, if the 15-minute zone is not very far away, we may get up to at least 9%, 10%, sometimes even 11% also get. But getting up to 15% is not practical. So that is the reason why what I did during the intraday, selected the 5 minutes target, drop base drop. Is it good enough? Yes, the reason is we are having a 1:5 RR. And moreover, this is, we are achieving 6% ROI from here to here. We are getting, again going up to here, 15% ROI achieving is not very easy. If anybody really wants to having greediness, they can use a trailing stop loss based on 1 minute. If really this 5 minute zone is broken, they would have got more good profit. If 5 minute zone is not broken, some of the profit they will be losing today. Instead of getting the 6% ROI, probably at some point they would have exited here. Maybe they would have achieved maybe 4% or 5% if trailing stop loss if they used. If those who are exited at this 5 minute zone, rule number 1, why we have to exit, already we achieved more than 1:5 RR. Second thing, from entry to this 5 minute supply zone, we have more than 6% reward is also there. I mean ROI is there, more than 6% ROI. By considering both these points, looking for this 15 minutes target is not really practical, especially intraday point of view. That's why this is the area we have to exit. So those who exited, they would have got a good profit, or those who did not exit and used a 1 minute trailing stop loss, probably let us identify the location where they might have exited. See here, you have a rally, 1, 2, 3, 4 base candles, rally. This is the digital line. Maybe a little below with some stop buffer. Let me draw this line approximately. So in this candle you would have exited. At what price? 2,923. And what is your target here? 2,936. That means 13 rupees less profit you would have got. Those who used trailing stop loss, thinking that this 5 minute zone will be violated and prices will be reaching up to this 15% ROI level, it will reach. If anybody feel like that, they would have exited here. So some of your profit margin would have come down. But still, it's a good profit till the blue color. See, anything, profit is a profit. That is the point you should not forget. But this is how our opportunity, our software has given. The fine-tuned zone, our strategy has given. Okay, how much profit DEEPAKNTR has given till that 5 minutes fine-tuned area, because here we have 1:5.15 RR is there. Second thing, already more than 6% ROI is also there. So in DEEPAKNTR, it has given 11,115 rupees profit, which is 6.4% ROI during the intraday. So excellent profit. See, you have two successful trades. The first one is DABUR and another one is DEEPAKNTR trade. Both are at different time intervals. At what time DEEPAKNTR trade is entry has given? 9 o'clock 55 minutes, 5 minutes candle it has given. And when you exited in this candle, 10 o'clock 15 minutes candle you exited. So within 20 minutes your trade is completed. And within 20 minutes you got a profit of 11,115, which is 6.4%. A little above our average intraday ROI we got. So this is another successful trade. And two trades are executed at two different time intervals, you have to observe. And when this trade is closed at 10 o'clock, 15 minutes it is closed. And entry at 9 o'clock 55 minutes. This is what you should remember. And the next one is ICICIBANK. This is also a daily zone. And here we have two trade opportunities. One is a demand zone and another one is a supply zone. Yesterday I told in the report video, because the report is only for at present premium subscribers. Premium subscribers knows. Yesterday I told you should look for opportunities both in the demand zone as well as supply zone, because ICICI is moving between high liquidity demand zone and also high liquidity supply zone. Let us see what our software has given. We have a rally, we have 3 base candles and a rally candle. This is a medium size leg candle, but part of the base because of the earlier base candles and also because of the leg out. So this is the entire thing is a zone. Our software identified rally, 3 base candles and a rally. And also our software identified supply zone also, high liquidity. It identified this is a failed ERC candle as a leg in, and after that 4 base candles. This is the first one, this is the second one, this is the third one, and this is the fourth one. But please observe the fourth one having hidden body. Even after adding hidden body, it is not qualified as a leg out candle. Still it is a medium size candle only. That's why software included even this candle also part of the base. And after that with hidden body we have sufficient body to qualify the leg out. This is a hidden zone. Actually it is not looking like a valid leg outs here, but this is a valid leg out because of the hidden body. So rally 4 base candles and a drop candle. ERC candle, 4 base candles and a drop candle. So this is how the zone is identified, 2 high liquidity zones. One is a demand zone and another one is supply zone. Now I have fine tuned both the zones. Look into the 75 minutes time frame. So here we have a drop candle with hidden body. After that you have 1, 2, 3, 4 base candles and again a drop candle as a leg out. This is the 75 minute zone. But when it comes to demand zone, we have multiple 75 minute zones are there. Here we have, this is the target. So don't focus on this zone. Just ignore it. Focus only inside the daily zone. Inside the daily zone, here we have a ERC candle as a leg in, and then we have 1, 2, 3, 4 base candles, and again with hidden body. At the hidden body, the moment you add the hidden body, it gets a huge body. So that is going to be a rally candle. That's why all these kind of zones looks like hidden zones. We should be always very careful in such kind of zones. Such kind of zones gives good trade opportunities. So this is one fine-tuned 75 minute zone in the demand zone, and we have one more fine-tuned demand 5 minute zone, that is we have a rally, 2 base candles and again a rally candle. Not a very great leg out, but okay, at least among the large size this is the smallest one, that way you can trade. This is good enough to qualify. The 75 minute zones. Inside the 75, again we fine tuned with 15 minutes time frame. Here you have a drop, base and again a drop candle in the supply zone. This is the 15 minute zone. And when it comes to the demand zone, within this entire thing is a 75 minutes area. Within the 75 minutes area, here you have a drop candle, two base candles. This is the first one, second one, two base candles, and a rally candle. This is the 15-minute zone. And we have one more 15-minute zone, drop, base, rally. This is another 15-minute zone. And again here, the one below, also we have a 15-minute zone. We have a rally, two base candles, and again a rally. This is another 15-minute zone. This is the one again we fine-tuned with 5 minutes time frame. In the supply zone, we have a drop candle, we have 1, 2, 3, 4, 5 base candles. This is, I consider this as a leg candle. These two are base candles and then a drop candle. A rally, two base candles and a drop candle. Because here price movement in a narrow range, so I clearly identified. In your first lesson you learned, prices will be moving in a narrow range, lesson 1.1. And again lesson 2 also I explained the narrow range, how exactly we need to. So that's why this is the real order flow we have. And then we have a drop candle. And when it comes to the demand zones, here we have a demand zone within this 15 minutes area, drop, 3 base candles and a rally candle. If anybody feel risk is high, you can further reduce to type 3 level. Or maybe you can, it is up to you. There is no rule that exactly minimize. Still if you can manage, you can further increase. You can adjust. If the risk is, if you feel this risk is high. These are all the techniques you have to understand. But there are, the moment you reduce, there are higher chances that you may miss the trade. That possibility is there. But if the risk is beyond your acceptable limit, you can't do anything. You have to reduce the risk. If you miss the trade, okay, you have to accept that. If you get a trade, that is could be a very good lucky trade for you. And here, there is no proper fine-tuned 5-minute zone. So what I did, I went to the 1 minute time frame and I looked into this area. One minute identified a zone, but this is not a fine-tuned zone. But still, why I have drawn this zone, you may ask. Because multiple times this zone is supporting, a lot of order flow is there. Maybe this could be a 1 minute high liquidity zone. Of course, it will be having some expiry period. One day it has to be violated. But high liquidity zones are indication that there is a strong order flow. If the risk is within our acceptable level, at least we can try. If it fails, okay, we lose a small amount of money. If it works, we get a very big money. Multiple times it is holding the prices. It never let the price go below this. Next time prices again came very close to this. After that again a pro gap is started from here. That's why indicating that this could be. So you can plan this as an aggressive trade. I already explained, high liquidity zones can be used as an aggressive trades. In aggressive trades you have multiple options. One is high liquidity zones. So this is not a fine-tuned zone, but this zone is a high liquidity zone. We can plan for an aggressive trade. So that's why I have drawn this zone. Now let us go back to again 5 minutes time frame. So this is an aggressive trade we can plan in case if this zone is violated. But anyway, today prices did not get into the fine-tuned area, so we didn't get a long entry today. Long entry we did not get, but we got a short entry that I will explain. First let me finish this, how I fine-tuned the zone. Let me complete that explanation. Okay, when it comes to this 15 minutes area, again here we identified a high liquidity zone. So here we have a drop candle, 1, 2, 3, 4, 5 base candles. This is the way I can draw the zone. Because the risk is, see, it is already tested. Multiple times it is tested. See here, first time, second time, third time, almost fourth time, fifth time, sixth time. Sixth is very close. If you feel risk is high, what you can do? Type 3 proximal. This is the one. This is the way you can plan a trade. See, prices coming close to the type 3 proximal area. That means just before type 3 proximal area, a lot of strong order flow is there. Here it just touched the type 3 proximal area. And not only here, the actual order flow is started even from here. This is also important. You can also draw a zone like this. You can also further fine tune like this. This entire 5-minute zone is responsible for this 15-minute zone. This entire thing is 15-minute zone. That way also you can plan a trade. But here, this is already a valid area. Because this is a valid area, so I have drawn the zone like this. But you should also remember there is still order flow is also there. Drop base rally. You can keep your stop loss here. This drop base rally, there you can keep the stop loss. That way you can plan your trades. If you want to take another trade, because this could be a high liquidity zone. So this is how ICICI Bank is fine tuned. But today we got a trade from the supply zone, because ICICI is having both high liquidity, demand zone and supply zone. Supply zone we got, from this area we got the trade. You may ask a question, what is this blue color line? This blue color line is stop buffer. Why I have drawn the stop buffer? Because the zone is stopped out today. I mean, the zone is not stopped out. The zone is pierced. Why it is not stopped out? Because it is within the stop buffer. Just 5 paisa below the stop buffer. Price again reversed back and gave a very good trade. See here. Here we got the entry. At what time we got? At 9:15. It's exactly, it is not 9:15 candle. If you look into 1 minute candle, you will get clarity. In this candle, you will get the trade. 9 o'clock, 17 minutes candle. This is a 9:15 candle. Mostly in this candle, we miss the trades. But definitely you will get a trade either in this candle or next candle also. If you miss in this 9:17, 9:18 candle also you will get the trade, because sometime price is stayed here. After that you won't take a trade. In case if you miss this candle, you won't take, because this zone is pierced. Once the zone is pierced, you won't take trades. But if you already take a trade, it is a successful trade. Slightly zone is pierced. It reached near to this stop buffer. See, the high of this candle is 1189 rupees 25 paisa, and the stop buffer is 1189 rupees 30 paisa. Just below the stop buffer it reversed and finally reached the 15 minutes target. So in which candle it reached the 15 minutes target? 10 o'clock 22 minutes candle, it reached the target. But here the point you should remember, those who have taken an ICICI Bank trade, they would not have taken a DEEPAKNTR trade on the same capital. If you are using different capitals, one used for ICICI Bank, you have some sufficient capital that you took a trade in DEEPAKNTR trade, that is a different story. If you are using same capital means you take a trade, you complete the trade, and again that money you will invest in next trade. That is not possible, because there is a time overlap is there. At 9 o'clock 55 minutes, you got DEEPAKNTR trade. But when this trade is closed, at 10 o'clock 22 minutes, this trade is closed. That means you would have missed DEEPAKNTR trade if you would have taken ICICI Bank trade. During morning hour, early hour, if you might have ignored this trade, next DEEPAKNTR trade you would have got at 9:55. At any point of time, you would have got one of these two trades. And the second trade you already got DABUR at 2 o'clock, at 2 p.m. you got the trade. That means today you got two successful high liquidity zones at any point of time. Okay, if you would have taken ICICI Bank, what is the target? 15 minutes target, because this is a short trade. And what is the RR you got? This trade has given 4:4 RR it has given. 4:4 RR it has given from the supply zone to here. We have a 15, we have a ERC candle as a leg-in, then base candle, and then we have a rally candle with hidden body. This is the 15 minutes target. So you got the entry, and after that it reached the 15 minutes. Maybe those who used the trailing stop loss, you would have got more profit. That is a different story. But we don't know. Trailing stop, in case if anybody would have taken a trailing stop, whether it will work out or somewhere it will be violated. See here you have a supply zone. Somewhere here you exited. Trailing stop also don't work out for 1 minute. 5 minutes trailing stop, if anybody would have used, probably you would have got more profit. Because this is the 5-minute zone. It reached the target. So 5-minute zone is not violated. This 5-minute zone holded the prices. After that it further pushed. And near to the next demand zone, it reached 15 minutes demand zone inside high liquidity. So definitely you would have exited near to this. More profit you would have got. That way, in case if anybody. If that is the case, somewhere here in these candles, if you missed here. If you exited at 1 o'clock, you would have exited near to the 15-minute zone. After that, you would have taken this DABUR trade. If anybody used a 5 minutes trailing stop, those who used a 1 minute trailing stop that was already hit, you would have exited and you would have got a little less profit compared to the exact this 15 minutes profit. Okay, anyway, at what time in this 15 minute zone? At 10 o'clock, 20 minutes, 5 minutes candle. But 1 minute, 10 o'clock, 19 minutes or 21. Okay, anyway, in this candle it reached, and how much profit ICICI has given? 8,785 rupees profit it has given, and which is 6% ROI, exact 6% ROI we got. Some 6.02 or 0.3% it has given. Anyway, it is 6% ROI we got. And you saved this trade, ICICIBank and DABUR, because of stop buffers. Stop buffers are very, very important. Today, 2 trades got saved because of stop buffers. And DABUR we have used stop buffer, 30 paisa stop buffer. If you stop buffer is 50 paisa maximum, but till 30 paisa level it crossed and then again reversed DABUR. But ICICIBank, it is 1 rupee 30 paisa stop buffer. 1 rupee 30 paisa. ICICIBank, and the price went up to 1 rupee 25 paisa. It didn't cross 30 paisa. Otherwise, ICICIBank would have been stopped out otherwise. So this is the way we got 2 successful trades. 3 successful trades today. And the next one is GAIL. GAIL is a 75 minutes high liquidity zone. So here we have a ERC candle as a leg-in, and then we have 3 base candles, and then it, and drop candle. This is not the daily zone. Sorry, GAIL is also a 75 minutes, not 75, daily zone. That's why I'm wondering. Drop base drop, this is a supply zone. Earlier 3 are demand zones. This is a drop base drop, is a supply zone. Daily high liquidity supply zone. Within this drop base drop, we fine tuned with 75 minutes time frame. This is the one, rally, 3 base candles and drop. This is the 75 minute zone fine tuned. Again this 75 minute zone is fine tuned with 15 minutes time frame. See here, 15 minutes, we have a drop, we have 3 base candles, and again a drop candle with hidden body. Within this 15 minutes, again we have a fine-tuned 5-minute zone. We have a rally candle, we have a first base candle, second candle is a medium size leg candle. So it is also part of the base, because it is before the leg out and after the base candle. That's why this medium size candle is also part of the base. This is the fine tuned 5-minute zone. and see the hidden gap, hidden sorry, my technical word I struck. Yeah, the pro gap. See the pro gap, professional gap. Because of this pro gap, there could be a strong order flow. Currently, the pro gap is holding the prices. Slowly, this Gale is consuming the order flow from this pro gap area. See, first time when it entered, it consumed some of the orders in the pro gap, and here, from here onwards, a very strong order flow. From here onwards, a very strong order flow. After that, it pushed the prices down. See again what happened today. Today, because the pro gap order flow is consumed till this area, further some more up it went. And the pro gap area, the actually prices didn't go near to this. Even if you add entry buffer also, your order won't be executed. Enough gap is there. But pro gap, if anybody took a trade, because of last session I explained, adding entry buffer based on the previous price action. See, this is the previous price action. You take this as a reference. Either you place your order here or little above you place your order if the risk is within your limit. If you feel there is the order flow is very strong, just a little above this blue color line or exactly at the blue color line, if you want to take a trade by doing a position sizing, if you want to take intraday trade in the cash segment, because futures risk management is very difficult because huge, very big risk is there. But cash segment you can manage by adding, by doing position sizing. You could have taken a trade. See how much fall it has given from here. It has given a very big money. But anyway, I'm just telling you how we can plan the trades. But taking such kind of big risk is not really good always. Already we got other good trades. At what time it entered here? At 1 o'clock 55 minutes it entered. Exactly the same time we got the trade in DABUR also at 2 o'clock. And moreover, here risk is high, very, very high. Okay, anyway, Gale, we didn't get a trade, prices did not enter, but I am trying to tell you the power of the professional gap, pro gap. Currently, order flow is taking from the pro gap area. That is what you have to understand. That's why in today high liquidity analysis, so many learning is there. Next one is the SRF. This is the 75-minute zone. SRF is also daily, I'm sorry. 75 minutes, only one zone is there. SRF is also a daily supply zone. We have a rally, 1, 2, 3, 4, 5 base candles and drop candle. This is a medium size leg candle. Drop candle. This is how our software identified this zone as a high liquidity. And this one we fine tuned with 75 minutes time frame. In the 75 minutes time frame, there is a rally, 3 base candles and a drop candle. Again 15 minutes time frame. See, the zone is not good. The structure, see, 15 minute structure is not at all good. Generally what happens, such kind of zones will be violated unless something happens in the lower time frame price action. So there is no 15-minute zone here. So what about here in this area? Here also there is no proper 15-minute zone. All these are all base candles. Such kind of zones will be violated. But here, how we have drawn, here we have another 75-minute zone, which I didn't show you earlier. This was the one. We have a drop, 3 base candles and again a drop. 75 minutes we have drawn. But 15-minute structure is not good. Such kind of zones will be violated. But why it is holding the prices? The reason is the 5 minutes high liquidity zones in both the 75 minutes areas. Let me go to the 5 minutes time frame. So here we have a drop candle, 2 base candles, and again a drop candle. This we have fine tuned at the type 2 level. So exactly within this high liquidity area. And this is the one holding the prices currently. See here, the price came very close to this. Again, this is the tested, and again here closed very, and again it is tested once again. This time when it is tested, rally base drop created. So this is the characteristics of high liquidity zone. It again and again creates the new zones within the same area. Next time again when prices enter, you can plan a trade. That is what today's trade plan. But it didn't get into this zone today. Prices didn't yet enter. So where is today's opening? Here in this candle, morning it is opened. Prices didn't reach this area. Otherwise we would have got another trade. Maybe the trade could be successful or failure because it is a high liquidity. At some point high liquidity has to be expired. But until it expires, we have to plan multiple trades. Because high liquidity, we have higher chances of getting success. In case if this is failed, the next again on the top, one more high liquidity is there. The previously I shown you the 75-minute zone. And within this area, there is no proper 15-minute zone, but 5-minute zone is there, which is acting as a high liquidity zone. See here, we have a drop candle, we have a base candle, and again we have a drop candle. Drop, base, drop. This is currently acting high liquidity. How it is acting high liquidity? See, it came after the drop candle, prices moved up, tested the zone, and see how it pushed the prices down. That was the first test after the high liquidity zone creation. And recently prices, recently means sometime before, I think on 31st July, prices again entered into this area. See how many times it is tested. This is the first test on this day, but previously already one test is there. This is the second one. This is the third time, several times, fourth time, fifth time, sixth time, again seventh time. Each time when it is testing, prices are coming. Again it is tested recently, prices came down. But after that again a new 75 and new high liquidity zone is created. So if this is violated, next trade plan will be on this zone. But anyway, today we didn't get a trade in this zone, SRF. And the last one is MPHASIS. This is the 75-minute zone. This is the 75 minutes high liquidity demand zone. So here we have a ERC candle as a leg-in. We have 1, 2, 3, 4 base candles, and again a hidden body with a huge leg-out candle. This 75-minute zone is fine-tuned with 5 minutes time frame. Sorry, 15 minutes time frame. Sorry for my mistake. 75 is fine-tuned with 15 minutes time frame. We have multiple zones here. We have a rally, base, rally. And again we have a rally, base, 2 base candles and rally candle. So medium size candles, these two. And next, again we have a drop. We have 3 base candles and again a rally candle. First one is base candle. This is medium size leg candle, maybe body, definitely not 75% body and also not 50% body, either case. So that's why according to the flexibility software will consider, and and even we can consider, because they are not the leg out candles, so they will be included as part of the base. And with again after that with a pro gap there is a rally candle. So this is another 15-minute zone. We have 3 15-minute zones are there inside the 75 minutes high liquidity zone. These 15-minute zones you need to fine tune with 5 minutes time frame. So this is the first 15-minute zone. Inside we have 5-minute zone, drop, base, rally. We have a drop, base, rally. You may say rally base, rally, this also we can consider, but this is already pierced. So it's no more valid. So at present this is valid, drop base rally, and this is another drop base rally, but this is already tested, picked up the order and again moved up. But this one prices came very close to this fine-tuned area. This is indicating there is a strong order flow in this area because there is a rejection. Price came and again moved up. So strong order flow is there. So definitely we can plan a trade if prices are entering into this area. But today prices entered into this area. What happened to our trade? I will explain. This is not a valid trade for many people, but a valid trade only for experienced people, this one. Why? I will explain. And here you have one more fine-tuned zone. You have a drop, 1, 2, 3, 4 base candles and a rally, and again with the hidden body, another rally candle. And this zone is also already tested. Previously prices. But observe here, you have a drop candle, you have 2 base candles and you have a rally candle. When such kind of price observation you will see, this is LOTL scenario, drop base rally. Maybe if this is a high liquidity zone, you may see such kind of scenarios. So that's why you can plan a trade in this zone in case again prices come into this, because already we have a newly created drop base rally, it picked up the orders and again moved. Probably this is the area we have real order flow will be there. So that's why even though it is tested, we can plan a trade. But this is not the case. It just picked up the orders. But this one, we have a drop base rally. Orders came very fine-tuned area, fine-tuned or type 2 proximal. This is type 2 proximal. Type 2 proximal is not tested, but user rejections happened from this zone. So definitely you can plan a trade. And previously, but the problem is today prices came very near to this zone. If you would have added some buffer, entry buffer, your trade would have been executed. So with this entry buffer and stop buffer both together, we have a 15 minutes target zone is there. Here we have a drop, we have 3 base candles and again we have a drop. This is the 15 minutes target. This is the way if you want to plan a trade with this entry buffer. See, entry buffer is added. Even then, you are getting only 2.5% RR. You are not getting 1:3 RR. You are getting 1:2.5 RR. So that's why such kind of trade is only for experienced people, because a lot of adjustment has to be taken here. See the adjustment here. At least 1 rupee buffer if you would have added, 1 rupee buffer. Anyway, this stock is a big stock, 2,696. Still you can add even 2 rupees buffer also. But if you add 2 rupees buffer, you will not get even 2.5% RR you won't get. That's why after adjusting to 1 rupee buffer, we achieved 2.5 RR we achieved after adjusting. That's why I am saying this is for experienced people. A lot of adjustment has to be done. And because some of the experienced people, even they accept 2.5 buffer, for them it could be a trade, not for us. Please remember, it is not a trade for us. They would have got a trade in this candle at 2 o'clock 5 minutes candle. Exactly at 2 o'clock 5 minutes, we also got a trade in DABUR, a successful trade. And good RR is also there in that stock. But any experienced person's point of view, I am telling this analysis. After the adjustment, this is how we can plan. And luckily, exactly at the adjustment level, a little below, another 10 paisa below, it came and it took the entry and moved and finally reached the target at 14 hours 25 minutes. But I didn't calculate what is the profit, what is the RR, because 1:2.5 I am not capturing in my record. Just I am telling you, this is a learning for you. How? Because now you people are doing trades. And from now onwards, you should also think like experienced people. Then only you will get experience. You have to observe such kind of trades. how I did the adjustment, and exactly that adjusted area the price reached and then moved, and risk management also handled. This is how you need to understand. But anyway, this is only for learning purpose. So I am not considering this trade. So this is about the high liquidity zones. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.